Happy Thursday, everyone. Good morning. 3 points that you can look to hear in today's edition. UK may be out of the union, but not away from negative rates. You'll be blown away from the amount China wants to invest in tech. And the positive results from US retailers continue. US stocks hit a 10-week high as investors swept aside China tensions and Fed warnings. The S&P 500 erased the previous day's losses on positive earnings data and is up more than 30% from March lows. Treasuries were little changed, with the 10-year yields down less than 1 basis point. The US dollar dropped, with the Kiwi and the Aussie up more than 1%. Oil jumped and gold rose less dramatically but was still positive. Asian equity futures are in the green. Wednesday brought further news of potential progress in the race for a vaccine. Inovio Pharmaceuticals said its experimental coronavirus vaccine induced immune responses in mice and guinea pigs, according to a new study published in Nature Communications. Researchers from the biotech company and its academic collaborators said that data was encouraging, but more testing is needed in animals and humans. It shows the market is showing how sensitive it is to vaccine-related news. So we saw Moderna's announcement on Monday driving that big rally, and we also are seeing this Inovio Pharmaceuticals data pushing the markets up. Oil rose for the fifth day in New York. EIA data showed US crude inventories declined for the second week in a row, and Cushing saw a record draw of about 5.6 million barrels. China traded slaps with Mike Pompeo. Beijing denounced the Secretary of State's referring to Taiwan's leader as president and congratulating her on her second term. Beijing said they're going to take countermeasures. The Senate, meanwhile, approved legislation that could bar some Chinese companies from being listed in the US stock exchange. The bill would require companies to certify that they are not under the control of a foreign government or risk a ban. The record pace of filing for unemployment benefit should continue to ease is the general consensus. Today we'll see jobless claims being released later in the evening today. Jobless claims probably fell to about 2.4 million in the week of May through May 16. In the week through May 16 from about 2.98 million the prior 7 days. That's what the economists are predicting. Bloomberg Economics has a preliminary May forecast of about 7 million jobs lost and a surge in unemployment rate to about 20%. Varying perspectives from the Fed. St. Louis President James Bullard sounded relatively upbeat, saying that if the virus is under control, the economy would be back to normal by the fourth quarter. Atlanta's Raphael Bostic wasn't so sure, noting tremendous uncertainty and tremendous pain. Dallas Chief Robert Kaplan urged the recovery depends on the American consumer resuming normal activities, regardless of whatever the government says. China will invest an estimated 1.4 trillion in tech over the next 6 years to 2025, calling on cities and private giants like Huawei to lay 5G wireless networks, install cameras and sensors, and develop AI software. It's part of a proposed fiscal package awaiting legislative approval this week. Moving on to equities. Xiaomi beat estimates. The Chinese smartphone maker got half of its revenue from outside its home market for the first time, and global shipments grew by 6.1% in the past quarter. Low and Target both smashed comparable sales estimates. In a now familiar move, both pulled out, Low and Target pulled out from the guidance for the year and didn't provide any other outlook. In terms of results, Low reported 11.2% increase in same-store sales in Q1, while Target said strong online shopping fueled 10.8% rise in the same-store sales last month. Target also said that the sales surged in the most recent quarter, but the retailer's earnings per share fell by nearly 2/3 from the same period last year. So shares fell by about 2.9%. The analyst community has an observation on this, is that there's general consensus of the fact that companies can adapt but the expenses of operating these higher sales is actually going up, and hence the earnings is being under pressure. Earnings that we can look forward to is Nvidia, Medtronic, and Intuit. Nvidia's figures may benefit from its data center segment thanks to the short-term boost from cloud spending binge, which may continue for the fiscal year. This is as per Bloomberg intelligence. On the rate side, the first 20-year Treasury sale in a generation did pretty well. The yield came in at about 1.22%, while the demand was about 2.53 times the size of the sale. That's reasonable, considering that the Fed backstop has been strong in the market. RBI will break tradition and buy notes from shadow lenders. It will buy only investment grade debt maturing in under 3 months via a 300 billion rupee or a $4 billion stressed asset fund. A sale of 3.75 billion pound in the 3-year UK gilt market arrived below zero. So it printed at negative 0.003%, negative 0.003% on Wednesday, marking the first time that investors have paid up for lending money to the government for a fixed coupon bond in the UK. So UK may be out of the union, but the negative rates in the European Union is kind of spilling over and becoming something that we can look to see how it plays out in the UK. Lastly, on the Forex, no surprises from the Fed minutes. Officials spent much of the meeting reviewing progress on lending programs to backstop everything from short-term funding market to corporate debt and municipal bonds. The US stocks move higher has been particularly positive for the Australian and the New Zealand dollars. Interesting comments from Governor Orr, who is the Reserve Bank of New Zealand's governor. Now, Governor Orr downplayed the possibility of negative rates. In his speech last night, he said the strategy is to keep the yield curve low or flat, but at this point, the RBNZ doesn't want to go to negative rates. That's a reversal from his, acceptance of negative rates in the last couple of weeks. They are prepared to do so, and it's one option, but a lot later is what he said. So New Zealand dollar caught a bid on those remarks. Of all the currencies, sterling is the laggard. UK inflation data was slightly weaker, but you also had this negative bond issuance, which also drove the pound lower. What we can look forward to is the manufacturing PMI from the US, the market manufacturing PMI, and the Philadelphia Fed manufacturing index. That's about it. Thank you very much, and stay safe and healthy.